This conference will now be recorded.
Okay, good evening, everybody. It is Saturday, January 28, 2023. This is Greg Morton. This is the weekend update for the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group for Canslim Growth Stock investors. So, as always, for educational purposes only, not recommending any stocks or securities to buy or sell, and all investing has risk of big losses. So, we want to learn first and only then invest. So today, let's look at the M factor like we always do, talk about the current market review and a character trend change that appears to be underway, talk about the action plan currently. We'll look at some charts that I think will be helpful. And then our next monthly meeting, the long 2-hour meeting, will be Wednesday, February 15th, 2023. So I'll mention that and how you can sign up for it. So let's look at the M factor. As always, as O'Neill teaches us, we want to diagnose, we want to interpret, we do not want to predict, and we really focus on three things with the emphasis on the top of the list the most. So the action of leading stocks, which is improving, actions of stocks owned, which are hanging in there in the group teaching portfolio, and then the market pulse, distribution day count, price and volume on the indexes, which really I bring all that into the coloring book. So we will look at that also in the highlights there. So let's hop out of here and go over to MarketSmith first. So here's the NASDAQ daily chart. And the first thing that jumps out at me, here's our follow through day back on January 6th. And then these little orange arrows are subsequent follow through days. So we've had 4 of those on the NASDAQ. Those are a sign of strength. I recall Justin Nielsen and Mike Webster telling us that their research showed that really, I think maybe it was all these successful follow through days that worked did have subsequent follow through days. And they look at the 25-day trading window from the rally day. I really look at the 25-day window from the follow through day to keep track of those. So this is very strong. And then we are back above all 4 moving average lines. We don't have them stacked in the correct order yet, but the NASDAQ's retaken the 200, which was resistance here, resistance there. So it'll be great. This week will really be key to see if it can hold that and continue to make some progress upward, particularly in the face of a slew of earnings reports and a Fed meeting outcome on Wednesday. So we'll see how that goes. But right now, this is just looking a lot better. The 10, 21, and 50 are in the correct order. And it would be nice if we can get those back above the 50. And in fact, in a couple more days, the power trend in the MarketSmith model could actually turn back on. So that would be another positive. So S&P 500, not quite as strong. 2 subsequent follow-through days, not as many as the NASDAQ, but we have some of the shorter term moving average lines getting above the longer term ones, trying to get everything stacked in the correct order. NYSE above all 4 moving average lines, and they're stacked in the correct order. 200 still pointing down, so it'd be nice to see it turn up. Dow has actually been showing some weakness because it's yellow in the MMTS system, the only one, but of course it led before, and if we're seeing money rotating into growth, that's actually a good thing. Russell above all 4 moving average lines again. So we're seeing strength in small caps, which often do lead the way up. They can't do it by themselves. They have to have more support, but that's looking good. S&P 600, same thing, above all 4 moving average lines, or these are stacked in the correct order. 200 still looks like it's pointing down, trying to curve up. So that looks pretty good. Group teaching portfolio basically flat for the year, 0.24%. Has been whipsawed around, about 55% invested. Some of the short positions, particularly in Fryer Battery, are doing well. I went over that in detail at our last meeting, and we'll go over some other information on that at our next meeting. So doing okay, not getting stopped out of stuff right and left. Pide's been a disappointment. This one's not performing well, hasn't triggered the stop loss rule at 7% yet, but the chart's not very constructive. We'll look at that one at our next meeting too. But that's basically where we are there. And then let's look at the coloring book. This is really where we can see getting some progress. So here's the follow through days. We're back on the 6th, January 6th on all three indexes. And then here's the 1, 2, 3, 4 subsequents. They're all marked, numbered 8.1, 8.2, 8.3, 8.4. We are at a 0 distribution day count on the NASDAQ. I have 2 on the S&P 500. Somebody pointed out at Twitter that IBD bumped that to 3 on Friday. I don't know why. It didn't look like a stalling day. I just don't know if they made a mistake or something happened. So I'll reach out to somebody and ask them about that. Dow is still yellow on the MMTS, but very close to flipping back to green. Market School is still at level 5 exposure. For the first time in a long time, the buying day count is exceeding the selling day count. So it's 10 buying days and 8 selling days. So that's flipped to green. So that's a new constructive sign. And then we still have new highs exceeding new lows on both the NASDAQ and the NYSE, and the window of opportunity is still open. So just a lot of strong signals there in all of this that I look at and keep up with on market direction or the trend, however you want to phrase it, which is very important. So that is all good. Let's go back over here. So we have been talking several weekends about the correct questions to ask for reentry. Has there been a valid follow-through day, or has the WU opened? Has the Fed pivoted? Buying day count higher, new highs, new lows. Look at the moving average lines. And then we want to see top-notch fundamental Canslim stocks set up in full and proper basis. So number 7 is where we're now making some good progress lately. There has been a follow-through day and 4 subsequent follow-through days on the NASDAQ. The window of opportunity is open. The Fed has not pivoted yet, but the expectations are going down on the size of the cuts. Buying day higher than the selling day count. It was no 2 weeks ago, and I didn't do a video last weekend, but it now flipped to yes this week, as I showed you. New highs exceeding new lows, yes. So we're just looking for one of these things, but more is better. And the indexes, in light of the moving average lines, they're improving more than they were when we talked about that 2 weeks ago. And then here again is, I think, where we're seeing the most improvement. And so that's a good thing. This weekend, my first pass watch list was over 40 that made that first cut that I want to look at closer. Those are all either in the newspaper and the stock list or in the growth 250. Still need to work hard to call that down, to the top few, 5 or less normally. No set number. Coming right when we're coming out of the bear market, or we think the trend is changing, I may have, could be as many as 10 on there sometimes if they're worthy of being on there. May want to cast a little broader net to watch when we're not sure if the trend has made a change yet. So that was good. My current market thoughts, I think the last 2 weeks have made a big difference. Much more constructive action in several areas, I think, indicating that a change in trend is underway. May just be a tradable rally, but it could evolve into something more. So as always, weekend routine is very important, and current market signals, I'm still sticking with what it's been for the last couple weeks. The go green lights on, but we still want to proceed with caution. So, as we make a couple good working decisions, or it means they are working, which they are, then those beget more potentially good decisions and our exposure increases. Want to be very disciplined. Our goal is still just to own 6 to 7 stocks total. That's very concentrated portfolio. So we need to be picky. They need to earn the right to get our money. They need to be the best of the best. And as Minervini says, no forced trades. and no audibles. So one weakness I do see, I was looking at the top 40 industry groups. So I just have 6 that I highlighted that are traditional growth areas. Normally it's at least 25% of them when we're in a good uptrend. So I'm going to be watching this each weekend to change. 3 of those are medical, so that's worth noting. And then you got electric contracting, retail internet, um, and computer integrated systems. So it'd be nice to see, some of the semis start popping up in here would be great to see. So let's keep an eye on that as we go forward. So let's look at some charts. Go back to MarketSmith. I had 2. So weekend update. Let's look at this first. So these are just some constructive charts. So Axon, this formerly was Taser, which of course was a phenomenal super stock. I mean, it had like 3 high tight flags. It's just a classic one to go study. Only 1 in 8 will ever be true market leaders again, and certainly do not expect it to do what it did before. But I think it's in a good place. We have it in the group teaching portfolio. Not a full position yet, but the entries are marked there. This one is the New America stock this weekend, which I posted the link on Twitter so you can read more about it there. And if you really want to know more, you need to go read the last conference call transcript. It's a lot of new with this company that I did not know about. Now, it did have a decline, not a loss, decline in 2022 estimated for earnings, but it's going up next year, and there's just so much new. That's one where, a little more forgiving on that, and having this low quarter and even a low quarter here in earnings was also written up in the IBD stock analysis article. Got good fund ownership. Lord Abbott's in there, so nice to see that. Hopefully we'll keep growing. Fund ownership overall has been a little bit flat, but now it's picking up. So this one I think worth keeping an eye on. This one has gone, extended, nothing to do. It's just great to see one really working. So that shows a sign of market strength. And this one broke out back here. I'm sure we were still in a correction, so probably was not even buying, but it's still nice to see with this one, a chart like that. VC, this is another one set up, could have had a sloping trend line entry there. Earnings up 778% in the last quarter. Let's look at a weekly chart. Yeah, so just massive earnings growth, just strong up here. Got the funds in it, 39 million per day. So that's one that hopefully is popping up in your weekend routine for further study. Nice 16% deep consolidation. So I mean, I just treat that as a flat base. It went over 15%, so the algo doesn't treat it as one, but that's still really tight. So I think that's constructive. Vertex, this one's set up, got a cup there. Let's see if it's got a handle, the daily. No, it's actually kind of wedging up on declining volume. So that's not very constructive. It has earnings coming up. Be nice if it build a handle and then maybe have a good earnings reaction, although the earnings estimate's only 5% growth. CLH, so this one's broken out, didn't really form a handle, maybe forming one now, a high handle. And then PI, this one, it broke out and shown some weaknesses. And then the other thing in the coloring book each day, I think y'all know this, I talk about it at the meetings at least, I put breakouts in bold, and I underline them and everything, but I only put in breakouts that are true Canslim stocks. So MarketSmith may have 10 stocks breaking out one day, and there may just be one of those 10 on my list because it has to have the 25% earnings and sales growth, has to break out on 40% or more volume. And normally I want them to be liquid, 20 million or higher. So, and the reason I study just the Canslim ones is because I want to buy just the Canslim ones, so I don't need to study the other ones. And then there's some early entries possibilities that I marked too that'll have a EE in front, like right there, EE, oh, it's supposed to be a question mark, SHLS with a horizontal trend line potentially. So I went back to the follow through day and put all those in a list that have occurred since then. So it's right here. So let's just take a look at that. These are in order. And I mark the breakouts with these little aqua areas so you can easily see where they are. So here, this one broke out. It's just chopped sideways, so hasn't broken down, but hasn't done anything yet. MedPay actually had an early entry and then a breakout. The early entry, you'd still be okay. The breakouts, testing, stopping you out. CSIQ, this was our early entry at the horizontal trend line, so it's held, forming a handle. Val, standard breakout, doing fine, up 6% from the pivot, so trying to get traction. HES up 4% from the pivot, so again, hadn't triggered you out, holding the moving average lines. TSM was here. What was that? Maybe it was probably a horizontal trend line, so it's probably early entry. CPA, this one broke out. It's an airline, has chopped sideways, but again, hadn't done anything wrong. IBKR, this one broke out and may have triggered the 7% stop. So they're not all going to work, of course. PI, this one broke out, did pull back, might have stopped you out. CLH, this one broke out, also didn't really have a handle, so maybe it's forming a high handle also. SHLS was a horizontal trend line, so it's still kind of in that chop zone. PCAR, this one gapped up, broke out on earnings this week. It's in the group teaching portfolio, so it's holding nicely so far. Massive volume on that earnings. Look at that. That goes back higher than all of those. NOV broke out, pulled back below the pivot. AIT looks like another gap up on earnings and is hanging in there. You know, the sales weren't quite at 25%, but the earnings were at 43. So I did put that one as a legitimate Canslim breakout. AIT gapped on earnings. Again, a little light on the sales, so I probably noted that in the coloring book. ALGM, earnings are coming, kind of gapped and broke out ahead of that, so only 3 days, that's pretty soon. And then XOM also just broke out. So Canslim earnings and sales. So there I've got 17. MedPay was in there twice, so it would really be 18 because it had an early entry. But that just something to look at to see, are we still getting breakouts and are they holding and making progress, which is something to study. Even if we are not in them, it gives us some insight on the market. So let's go back over here. We did that. EPS season going to crank up big time this week. It already is. That's a viable gap up hunting ground. Really, since the M has improved, with stocks performed cleanly. And again, PCAR was a viable gap up on earnings this week. Fed meeting lays ahead of us. And just overall, again, feels like we've had a change in character, feels like we at least now have a slight tailwind working in our favor. It all could turn around next week. I can't predict, but this is acting better than any of the follow through days and the breakouts and the setups and the quality of the setups. We're not quite at, I remember at one of those old webinars, Scott O'Neill said that when it really gets going, coming out of a true bad bear market, you're like a kid in a candy store. There's just so many good things. You can't even buy them all. Well, I don't think I'm a kid in a candy store yet, but there's merchandise on the shelf. So things are improving and maybe we get in the candy store in the weeks coming up. So our next monthly meeting will be Wednesday, February 15th. You register for that at the Stockyard Meetup site. Those are $12. You can attend live if you want to. We do chart review and chart analysis and discussion at the end. You get the recording, the slide deck, the links to webinars and articles. I usually send out several things that we talk about during the meeting. If you're a first timer, I send you a courtesy copy of last month's meeting. So I'm still working on the agenda. We'll revisit and update the short thesis on that SPAC Fryer battery. We went through that in detail last meeting. And I probably will go through viable gap ups because we're in 5.5 months straight of earnings season now. So we got 3 months for the 10K, the annual report, and then soon as March gets here and that ends, then we have another month and a half of the 10K or 10Q for the first quarter of the fiscal year. So we really are, we're gonna have 5.5 months. So February is a good time to talk about viable gap up setups and how to study those and how to get prepared for those. And then prior meetings, if you don't have written sell rules, great time to do that at the first of the year. So I spent 3 meetings teaching on that, and then a complete weekend routine. I kind of did in September and October. So you can email me at the email address shown there. You can follow me on Twitter at gmorton512. And of course, you're on my YouTube page. So like and subscribe. Greenville Eastside IBD meetup site under the More tab, and then message boards is where you can find the coloring book, group teaching portfolio, and a ton of other Canslim resources I've assembled over the years. Stockyard meetup site is just for signing up for the meetings. So that's it. Hope you guys have a great rest of your weekend routine, and hope we have another decent week this week in the market with the Fed and the earnings reports coming, and I'm sure more data also. So that's it. I'm out of here. See you guys.